Welcome to our channel. In this video, we show how to earn more at work without asking for a raise. In this video, we'll explore practical strategies to increase your income, maximize your benefits, and make the most of your current job. Discover how small changes can lead to bigger paychecks. Let's get started how this approach will work for both employees and employers. Then we will explain the process how to make more money at work without a raise. Hang in, you don't want to miss it. Did you know employers must pay both the federal and provincial governments for employee contributions based on their paychecks? On average, this adds about 17% to labor costs. If an employee earns $20 an hour, the total cost to the employer is around $24 per hour. Looking at a yearly salary of $40,000 per employee, this means it costs the employer an extra $6,800 a year per worker. This explains why employers are often hesitant to give raises. Now that we understand the employer side, let's look at the employee's side. They are working a job, not receiving raises, have high deductions at source themselves, and after working hard, have very little to show for it. So many workers are going on strike. But higher wages put them in higher tax brackets, not making a major difference. Also, not working, just picketing for very little, can put some in debt or further in debt. To be clear, making more money at work without a raise isn't likely if you work for a large corporation or the government. However, approaching a small or medium-sized business with what we're about to discuss can be beneficial for everyone involved. The answer is becoming an independent or dependent contractor. You can register your business even in your name and benefit greatly. To begin, there are no deductions at source taken off your paycheck. Being an independent contractor means being able to write a percentage of expenses off, like travel, if you have a home office, some meals, car repairs, etc. Loans? Find a good accountant. And at the end of the year, you'll pay considerably less than an employee doing your same job. As a new business in Canada, you won't have to pay HST until you earn over $30,000 in revenue. Then any HST business-wise expenses like travel, you can claim the HST back. It's important to set aside a portion of your earnings for taxes. If you earn $40,000, you will pay around 15% in taxes instead of about 26%. This means you could have around $4,400 more in your pocket each year. The only downside is you would not qualify for unemployment insurance, but it takes weeks and sometimes months to get anyway. In our example of $40,000, it works because the employer will save $6,800, and the employee will gain approximately $4,400 extra with a raise. That extra money can go to saving, debt, or buying a home down the road. This is how you can make more money at work without a raise. There are many employers open to this type of arrangement, making an independent contractor agreement, and you are set. If you found this video informative, please subscribe and give a thumbs up for more about money management and debt relief.